morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, January 4th. All right, so we had a big explosive move up. This was all done in the pre-market, so wouldn't really surprise anybody. We opened up. If you woke up in the morning, you see we're up about 16 handles. Market gapped up about 18, run to about 20, and then kind of faded, went sideways pretty much all day, and then some short covering at the end of the day. So for the day trade, if you're trading indexes, not too much really to grab hold of. And it is the first day back of the new year, so you always want to trend lightly when you're trading, getting ready and just getting started. You know, I'm sure a lot of you have been taking some time off, as well as I did. So back to the markets. Yesterday I put out 3 big videos. I put out a normal strategy video. I put out a special edition video on gold and of course crude oil. So I'm going to cover these real quick, but look at the video from yesterday. It's still out there. It's on Twitter. You can check it on a YouTube channel or on our website at tradingmarkettechnicals.com. Gives you a full explanation of what I'm looking for. Come the new year, I'm looking for a few sectors, and I'm looking for sector rotation, money coming out of different sectors that are overvalued and into some of these value plays, if you will. Okay, first thing I'm looking at, obviously, as you all know, is going to be gold, at crude oil, and rates, meaning TLT bonds. I do think rates have made a generational low in July, August, so I do think rates are on a rise. So interest rate rising environment, a lot of money managers, hedge funds are going to have to scramble for that change. When that change does come, there are going to be certain sectors that are going to be out of favor, okay, and certain sectors that are going to be obviously in favor. So that's something that we're going to be looking at in the coming days and weeks. As of right now, as you know, aside from the 3 sectors, I'm looking at the IBB index. Many of you have asked me for IBB, and it is one of the sectors that I like to follow. Right now, seasonality comes into play, into some real good strength. Now, obviously, they're getting clobbered, or let's just say that they're really not moving anymore because of their pricing increase and the pricing pressures that they have. Of course, Trump too as well, putting a factor in it. But we are in a consolidation mode here. Excuse me. We are in a consolidation mode here. You could see that clearly. We could see when you see MACD, RSI, or any indicator that just really doesn't do much of anything, just goes sideways, that means that energy is building. You could see our Bollinger Bands from here and here are building. So we're ready to explode either way out of this band. Here's this horizontal box. 275 is going to be the area that I'm looking for on a breakout, and it's going to be on a closing basis, guys. You can't really take anything for granted if it just pops up and then goes back down again by the end of the day. Closing basis 275 really needs to get taken out, or 260. Okay, that is really going to be the cue. There's plenty of room to run. You could see 300 here is going to be, we're in this big, large, sideways horizontal channel. But with the IBB, I mean, you're talking, 25 points. So you can easily achieve those objective goals in your trading plan. So I'm just going to move this basically up to here. So 275, and then you got 279.50, which is the 200. If we can get back above the 200, fund managers love to see price above 200. They start looking to accumulate, okay? And also, remember, we have seasonality trends for January, February, March. We start a big trend for the year. So I am really watching this. This is going to be a possibly good play going into the next couple of days and the coming weeks. IBB. Next, going to be the dollar. We had an island top reversal. We did get down, but now we're back in it again. So I'm watching closely here. I think the dollar is for real. I think the dollar does need to pull back a little bit. It's like anything else. Same does the market. Market is just continued to rise. And what's happened, the more people you get involved and the more people, meaning traders, individual investors, retail, to continue to buy, at one point it's just not going to be enough buying pressure to push this market higher. What's going to happen? It's like a rolling ball. You roll the ball up the hill, it's going to stop and roll back down again. And that's something that I am ready and waiting for and anticipating myself, that the markets are just about ready to heave over. I've seen it. We've seen it technically. I've showed you all the indicators that I can. In our TMT trading model, we're just about ready to go on a sell signal. Not yet. It's not there yet, but there are many of our components in our model that are turning back to a sell signal. So let's just keep that in mind, and then look at the dollar here, because the dollar's going to obviously going to put pressure on gold, commodities, precious metals, grains, or the whole squadron of commodities. You got to watch, because if this dollar breaks out of this upward consolidation, I think you're going to have a big move up. We have earnings that are coming up, and I think a lot of the multinationals are gonna report some poor earnings because of what's happening with the headwinds of the dollar. So just something to keep an eye on. WTI crude, again, if you really want to get a better in-depth analysis, go look at the crude oil special strategy video that I put out. Again, it's on Twitter, YouTube, and it's also on our website. I mentioned 55 and 53. 55, if we break out of 55, we need a couple of days close. I'd like to see a week of consolidation. Then I think 55 will get you 60. If we break below 53 and we stay down below 53 and we even get down below 52, then I think you're probably looking at more like 48 in crude oil. Okay, but again, today is going to be the Department of Energy. I think Department of Energy comes out tomorrow because of the fact that we had a holiday on Monday. So tonight is going to be the API, I believe. I'm not sure. Just check the calendar because it does screw up the schedule. But watch for the API tonight. If we get a bill tonight and we get a bill tomorrow in the DOE numbers, then I think that it's just not ready yet. And if we get another week worth of builds in inventory, then I think that a lot of the deal, nobody's following the deal or at least adhering to the deal of production cuts. I see crude oil all the way back down to 44, and then we would reevaluate. Now, if in fact we get a bunch of draws and it looks like that everybody's adhering to their deal, then I think you see 60. But right now you're in a range. I wouldn't do anything other than day trade instead of hold this crude oil at the moment. Next is going to be rates. Let's take a look at the 10-year. You can see the 10-year have extremely elevated. You can see the 50s at 2.29%, 2.24%, excuse me. At the best, I think you see it get back down here for a retest. If anything, what I'll do is I'll put some Fibonacci retracements on these, and I'll show you where we're looking to go. At least a 38% retracement, which will probably be somewhere around here. I'll do that for you guys for tomorrow. But if the rates go lower, bonds will go up a little bit. TLT looking pretty constructive. We did take out that local swing high of this horizontal channel, so that goes into a buy signal. However, okay, remember guys, this is in a downtrend. It's in a big downtrend. I'd like to see really some explosive moves intraday. I love the volume that's coming up. I love our MACD and RSI now getting above 30, and MACD not yet there, but crossing up above 0 again. I do like the fact that. So if you are looking to trade it, I would say yesterday's low is going to be your Q, a 118, let's call it, for a stop. And then you're back into the channel. If you got more room, obviously below the channel would be the ideal situation if you had enough room. Again, that all depends on your trading account. Next is going to be GDX. Now, as you all know, mentioned many times, again, in our video yesterday, check it out, in our strategy video on gold. I like gold. I like gold for 2017. I think gold's going to really, really shine. This is a great pullback. We've got all the way down to the a 61.8% retracement, almost to the 76.8% retracement. And gold is in a downtrend. You could see that. Now, gold popped its ugly head above the downtrend. Now, I need another day of closing above it to see where we are from here. Again, our horizontal trend line, we took out the local swing high. That would have gave you a buy signal. Again, it was last week. It was very low volume, so it's okay if you missed it. But GDX, the miners go first before gold does, and then after the miners start to really move higher, gold actually shines on the second part of the move after gold miners move. So watch the miners. The miners do move first before gold does, and you can see that here. Gold, pretty much the same chart. It's in a downtrend. We're still below our 40-40 proprietary price channels. That's something that you want to be looking at. So that's still giving us a bearish bias. However, the GDX is above our proprietary price channel. So something just to keep an eye on. But gold, I think, is ready to move, as well as bonds. Spiders, you can see here, we did really not much of anything. Most of the move happened in the spiders and in all the indices at the opening. And you can see here, guys, look, we're still downtrending, right? Lower lows and lower highs in our MACD and stochastics and spiders. So we're just making a lot of noise here. I don't think that we had good PMI yesterday. Overseas had some good numbers. So it's to me, this is just creating a lot of noise. We need to really break down below the 50, okay? That'll get you 220 and then 217. Or we need to start breaking back above this large engulfing candle at 226 to really start moving higher. I don't think that's going to happen. I just don't think that's going to happen. I think, if anything, on inauguration day is the 26th, I believe. I think that the rally just about is fizzled out here. And then again, anything could happen. Earnings could be stellar. They cut earnings down. Analysts cut earnings so they can beat earnings. I mean, it's a whole big plan. It's that a lot of the pundits and a lot of the analysts and they all try to make it look, sugarcoat everything, that everything is just great and rosy, where I don't think they've anything. I think most companies have just cut their expenses to beat earnings, to try to even beat while analysts are bringing earnings down. So nothing really do great here, especially when you're 28 times forward earnings. Very expensive the market is, and I think it's just about ready to do a little rollover. But again, we need to see evidence. Here's our Pro Trader Premier video. Just wanted to show you could see here. This is how one of the components, our Fibonacci, you could see it coincides very nicely with our 38% retracement. Here's that M-top formation, getting a little long in the tooth, but still hanging in here. You can see that 135 is going to be a big area of resistance. 135 will get you 130. Okay, and that's in our IWM. So Pro Trader Premier video, check it out. We're going to make a big announcement soon on the videos, so look for that. And last is going to be the Qs. Qs did okay, but really nothing to write home about. You can see here we're still within the big bearish engulfing bearish engulfing candle. So keep an eye on that. A lot to look at this week. FOMC this week as well. Let's see for signs, for clues, and also watch for the API numbers in crude and also the DOE for tomorrow. Have a great day, everybody.